Right. So, you know how we like to do these deep dives, right? We take the sources you send us and try to like really pull out those key insights.
Maybe get to the heart of it.
Right to the heart of it. And today we have one, it's a Motley Fool article called Three Top Buffett Stocks to Buy and Hold for the Long Haul. So I'm guessing, you want to get smart on this kind of quickly, right? Like,
yeah,
figure out why this article thinks these companies are, long-term winners.
Yeah, I mean, especially when you consider it's framed through that Warren Buffett lens, right? Like, what would make these picks resonate with his whole philosophy of buying great businesses and holding on to them?
Exactly. So that's our mission today, is to figure out the why behind these picks, and we're focusing on these buy and hold ideas. Okay.
Sounds good.
So let's kick things off with their first pick, which is Amazon, ticker symbol AMZN.
Okay.
Now, Amazon, obviously huge company, right? Everyone knows them for e-commerce.
Yeah.
And then, of course, their cloud computing arm.
Yeah.
AWS, Amazon Web Services.
Yep.
Now, interestingly enough, Berkshire Hathaway, which is Buffett's investment company, they actually first bought into Amazon back in the first quarter of 2019.
Interesting. Yeah, and what's really fascinating is to look at how that investment has performed since then. The article points out that Berkshire now has about a $1.98 billion position in Amazon, with an average purchase price around $84.20 a share. Yeah. So over the past 6 years or so, that stake has more than doubled in value.
Wow. That's
which, definitely aligns with the kind of long-term focus that Buffett is known for.
Yeah, absolutely. And it's not just the stock price. It's been, going up. The underlying business has been growing like crazy, too, from 2019 to 2024. Amazon's revenue had an average annual growth rate, a CAGR of 18%.
Okay.
And then earnings per share, their EPS, grew even faster at a TER of 37%.
Wow, that's a pretty significant momentum, especially considering all the, economic ups and downs we've seen in recent years.
Yeah. And, if we're looking at this through that Buffett lens, what's impressive isn't just the high growth rate, but the fact that that growth seems pretty sustainable.
Yeah.
He really likes companies with what are called durable competitive advantages, sometimes called economic moats.
Right.
And Amazon's combo of massive e-commerce and that increasingly crucial cloud infrastructure with AWS, it's like a double moat, And those two segments, they kind of support and reinforce each other. It's a pretty smart setup.
Yeah, that's a great point. They've built this really interesting synergy between those two parts of the business. The e-commerce side often has lower profit margins, but AWS is much more profitable and helps to bolster those overall returns.
Exactly. It's like they've got this machine where one part feeds the other, giving them a real edge.
Right.
So looking ahead, what makes Amazon still a good long-term hold? Specifically, if we're thinking about it like Buffett might.
Well, the article really emphasizes the sheer scale of Amazon, how they're just so dominant in both e-commerce and the cloud. But what's even more interesting for long-term growth is their potential role in the whole AI revolution. As artificial intelligence keeps developing and getting more sophisticated, it's going to require massive upgrades and expansion of cloud infrastructure.
Oh, yeah, true.
And AWS is in a prime position to capitalize on all of that. It's like they're not just riding the wave, they're actually shaping the wave of the future.
So for our listener who's out there tracking those future tech trends and wondering who's going to be the top dog in the market, Amazon definitely seems like one to watch, especially through this Motley Fool analysis of a Buffett holding.
Yeah, absolutely. All right, so moving on to the second stock that the article highlights. Okay. This one is Visa, ticker symbol V.
Visa,
I'm guessing most of us use a Visa card pretty regularly, so we have some inherent understanding of what they do. But just to put it out there, they're the world's leading card payments processor.
Yeah, they're everywhere.
They're everywhere. And, Berkshire Hathaway, they've been a long-term fan of Visa. They actually first invested back in the second quarter of 2011. And get this, their returns on Visa are even more impressive than what we saw with Amazon. Berkshire's current Visa holdings are valued at $2.75 billion, with an average purchase price of just $52 a share.
$52 a share. Wow.
So over the past 14 years, that's turned into what they call on Wall Street a six-bagger.
A six-bagger.
Meaning the initial investment has increased sixfold. So it's really a testament to the power of holding on to quality companies for the long run.
That's incredible. And what's really interesting is how consistent Visa's growth has been from 2011 to 2024. Their revenue grew at a TGR of 11%.
Okay.
And their EPS at an even more impressive 19%. So that kind of steady upward trajectory maintained through thick and thin really speaks to the resilience of their business model. It's exactly what Buffett looks for.
Yeah, exactly. So what is it about Visa's business model that makes them so resilient? The article points out a key structural aspect. They don't actually issue the cards or hold any of the consumer debt.
Oh, interesting.
Instead, they partner with banks and financial institutions to handle that side of things.
Okay.
Visa's main role is processing the transactions across their massive network, and they make money through what are called swipe fees, which are typically between 1.5% to 3.5% of each transaction.
So they're kind of like the toll booth on the highway of payments.
Exactly. They own the roads, but not the cars. And this model is incredibly efficient and inherently less risky because, they're not exposed to the ups and downs of consumer credit.
Right.
And on top of that, they have a near-duopoly with Mastercard in the card payment processing market, so they have a lot of power for most merchants accepting Visa. And Mastercard is a necessity, which guarantees a pretty steady flow of transactions and those sweet swipe fees.
But don't they face pressure to lower those fees, though?
Oh, yeah, absolutely. The article mentions that there's constant pressure from both businesses and regulators to bring those fees down.
Okay.
But the general consensus is that Visa and Mastercard are going to maintain their dominance for the foreseeable future.
Because of how widespread they are.
Yeah, exactly. Their network effects are so powerful, it's tough for anyone else to compete.
Right.
So if we think about your interest in those stable and enduring market positions, Visa definitely checks that box. They've built this incredibly valuable network and a business model that has stood the test of time. It really fits with Buffett's love for those companies with long-lasting moats.
Okay, so we've covered Amazon, we've covered Visa.
Right.
Now let's move on to the third and final stock from the Motley Fool's list.
Right.
This one is Chubb, ticker symbol CB. Now, Chubb might not be as instantly recognizable as Amazon or Visa, for the average person, but they're a major player in their field.
Yeah, they're actually described as the largest publicly traded provider of property supplemental health and casualty insurance.
Okay, so insurance.
Yeah, insurance. And what's kind of interesting here is how recently Berkshire Hathaway invested in Chubb. They just started their position in the third quarter of 2023.
Oh, wow. Very recent.
Yeah, very recent. And it's already a significant stake at $7.95 billion. They bought in at an average price of $221 a share. And the article points out that they've already seen a 33% gain.
33%. Whoa, that's a pretty quick return.
Yeah, it is a pretty quick return, especially considering how short a time it's been. And beyond just the stock price, Chubb's overall performance seems pretty strong in 2023. Their core operating income per share, excluding tax benefits. So we're looking at the underlying profitability here, grew by a substantial 30%, and they're projecting a still healthy 13% growth for 2024.
So they're not just, a flash in the pan. It seems like they have some real momentum behind them.
Right, and what's interesting about the insurance business is that it tends to be pretty insulated from some of the broader economic challenges we've been seeing, like inflation and rising interest rates.
Oh, because people still need insurance no matter what's going on.
Exactly. The article highlights how insurance policies are essentially necessities. People and businesses need coverage for their properties, their health potential liabilities, and they're less likely to cut back on that spending even when they're tightening their belts in other areas.
Right. Makes sense.
And this stability is reflected in Chubb's consolidated net premiums, which grew by 13.5% in 2023 and are projected to grow by a respectable 8.7% in 2024.
So it's kind of a safe haven when the economy is a little rocky?
Yeah, that's the idea. The article suggests that as investors become more cautious and maybe start moving away from those consumer-driven and cyclical sectors, a company like Chubb, which provides these essential and relatively stable services, becomes even more attractive.
So it's like the steady Eddie of the investment world.
Pretty much, yeah. It's the kind of business that can weather the storms.
Now, what's interesting, too, is that Buffett's Berkshire Hathaway has been adding to their Chubb position while actually reducing their stakes in some other major holdings like Apple and Bank of America.
Correct.
And they've also been increasing their cash and short-term treasury holdings.
Yeah, so it seems like they might be making a broader strategic shift toward more defensive and less volatile investments in the current economic climate.
Like they're battening down the hatches a bit.
Yeah, exactly. And for our listener who might be looking for investment options that are considered more stable and less vulnerable to those short-term market swings,
Yeah.
Chubb definitely seems worth considering, based on this motley fool analysis of Buffett's moves.
Yeah, it's potentially a way to navigate some of that near-term uncertainty while still aiming for those solid long-term gains.
Okay, so to kind of wrap up why the Motley Fool is highlighting these three stocks as buy and hold candidates, it really comes down to a mix of factors that fit with Warren Buffett's well-established investment approach.
Okay.
With Amazon, it's their dominance in those high-growth areas like e-commerce and cloud computing, and their potential to really benefit from emerging trends like AI. With Visa, it's that incredibly resilient business model and their strong position in a near-duopoly market.
Right.
And with Chubb, it's that stable and essential insurance business, which tends to hold up well even during economic downturns.
Huh?
Each of these companies, in their own way, has that strong market leadership and the potential for long-term growth, or at least stability, at least according to this interpretation of Berkshire Hathaway's investment decisions.
Okay, so let's tie it all together today. We've taken a deep dive into this Motley Fool article and their picks for 3 Buffett-backed stocks to buy and hold for the long haul.
Right.
We had Amazon, the e-commerce and cloud giant,
Uh-huh.
Visa, the king of payment processing, and Chubb, the steady Eddie of the insurance world.
Yeah.
Each of them, for their own unique reasons, rooted in, strong market positions and resilient business models, represent the kind of companies that a long-term value-focused investor like Warren Buffett finds attractive. At least that's what this article is suggesting based on Berkshire Hathaway's recent activity.
Right. And as you're thinking about all this, it's worth considering Buffett's famous strategy of identifying these high-quality companies and then holding on to them for the long haul.
Yeah.
So it begs the question for our listener out there, taking this philosophy into account and based on your own observations and interests, what other sectors or individual companies do you think might also fit into this buy and hold approach? It's always good to go beyond the specific recommendations and explore the wider world of potential investments that have, enduring value and long-term growth potential.
Absolutely. All right. So that wraps up our deep dive for today.
Yeah.
Hope you enjoyed it.
Always a pleasure.
And as always, keep those sources coming.
Yeah, we love to see what you're interested in.
All right. Until next time, happy investing.
See you later.